Hello everybody, welcome to another weekly market review. Today is the 9th of March 2020. The markets are having absolutely fantastic directionality and great volatility. A lot of money to be made in this market, guys. Let's get right down to it. So here's the total market cap chart, and if you look at the channel right here, we were testing it as support and we lost it and retested it in confluence with this weekly level, and we began the next impulse down. I'm just gonna hide this channel right here. Let's get to market structure and levels. So what I want to show you guys is a simple market structure, understanding of market structure. What you can see right here, this is V top, look at the complacency shoulder on this. It's so weak, look at the complacency shoulder right here. Can you see it? So we had a bit of a V top, but we had a complacency shoulder. Let's go further back. Look at the complacency shoulder right here. Similar. It's so weak. There's nothing that is coming up over here to trap the market, because already it is enough to trap the market. And basically what people did is they were going long here, looking for a further move up, and it's pretty much the same thing right here, guys. Such a weak complacency shoulder and a huge drop, and everybody's still bullish. So this is basically showing a lack of understanding on their part on market structure, and I'm not going to go so deep into it. I think people who've been following a lot of other people who are still bullish right here, I mean, you're just going to learn your lesson, and your lesson is to build your own knowledge and understand that no market is easy and there is no free money anywhere. You have to work hard. You see what I do and the work I put in my analysis. I have worked so hard, guys, and there is no other way to make it. This is the financial world. This is the world where there is a lot of sophisticated people out here to take your money, and they're just going to take it from you. Why? Because you are less prepared than they are, so it's as simple as that. Anyway, let's get to it. Looking at total market cap, basically I had a bounce zone, guys, where it was possible to get a bit of a reaction, which was yesterday. This was the 6-6 level, very close to this weekly support, which is now turning into resistance, and we had a very weak bounce here, and you can see how strong this move is. You want me to set a target for this? Let's go to a higher time frame. Go to the weekly. So on the weekly, we have this 2020 yearly open. Essentially that should be the first place where we should get a reaction. But honestly, guys, if you saw the Qualcomm fractal on my timeline yesterday, I'll probably share it a bit later in the review. It pointed to a possibility of a full retrace, and even taking out of this level, before turning. This is literally a freight train. Look at the structure on this on the weekly time frame. Look at how the previous breakdown was nice and easy. Look at the structure on this. We still had a bit of an up week. This was the up week that came. So I don't think you should be expecting too much from this market, and what I can see is the strategy should just be to short whatever kind of bounces you can get. And what I would say is that if you're not in yet, I mean, yesterday was such a weak bounce. Let's just measure it so you understand how weak this market is. So this was the drop. We did not even get to a 23% bounce, guys. This was literally just possibly less than a 20% bounce. So what I would say is it is possible. Maybe we do end up getting a bounce here again. Just pull out a fib. Anything between 23 and 38% would possibly be acceptable. But the thing is, you can see the move is so stretched. So you will have to wait for price to build some kind of a structure from where you can manage risk. Because you need confluence, guys. You can't just pull out a fib and just start shorting where you think it can turn. You need a structure to base your trade off of. So if we do get some kind of a reversal, say you get this and this, then this is where you take your trade, because you have somewhere to manage your risk, you know. So even if you do have to short, you have to look for a bounce. Essentially you're looking for some kind of a structure to play out of, and this is all the play there is in any other market. But basically, if we're looking at long-term targets, I did tell you it is possible. First, at least the 2020 yearly open, you know, and on the way we can find support. This 200 billion was my initial target for a decent reaction, you know. So let's take it level by level, and currently we are in the first level where we should be getting this reaction, this weekly level right here. So let's see if we can get a reaction here. Just pull out a fib. If it is possible, you get a retest of this weekly level 225. You'll have some kind of a structure to base your risk upon, which will be this daily structure right here. So you'll be able to manage your risk on a daily time frame only from here. But basically, guys, just wait for some kind of price structure to play out, because even if it does have to drop, it will give you some kind of bounces. If not something bigger like this, it will give you some kind of a structure to play it off of. But yeah, this 2020 yearly open looks like a juicy target, a juicy first target. And this 200 billion level is also, I think, a big support level where we should get some kind of a reaction. So that's all for total market cap. So here's the altcoin market cap chart, and again, if you just need to look at the fractal on my Twitter timeline. I'm gonna try to share a little bit of it here, but it points to a complete retrace. There is a decent amount of support here, guys. This weekly block, these two yearly open levels, these are major levels, you know. So that is our eventual target for this move, and still another 30% to go, guys, before we can make that full retrace. So again, we need to be looking at lower time frames to see what kind of a reaction we can get. And you can see we're getting a decent reaction off the golden pocket. This weekly level was a support level where we were to get something, but we've kind of dropped a bit lower straight into the golden pocket. Let's see what kind of a bounce is possible, guys, because we are currently bouncing right now. You know, you cannot say how strong this bounce would be. Again, you can see how big this drop was, and all I would say is wait for price structure to build out. If you're not in already, you have to wait for price structure, you know. And there is a decent probability that it is somewhere around this 80 billion mark, you know. This is where we would get our next opportunity to take this short. It matches up with the 382 level. So just watch for this level and watch for low time frame price structure to build out here if we can get here. So it's the same game plan for alts, but essentially I just wanted to again show you price structure. You know, this has been a strong move, and I would expect some kind of a structure to build out before we make our next move down to test these lows. So nothing changing with that analysis. Let's see what price does once we do get down here. But again, I mean, this is so nice. It's such a strong trend, you know. I have just failed to understand why people, they like this but they don't like this, you know. It's a trend, guys. This was a trend, you know, and this is a trend again. So why don't you just play the trend, you know? This is money, this is money too. So please just remove your bias and allow the markets to help you make money, you know. Just, that's all it takes. If it's too much of a problem, just flip the chart, you know. You can invert the chart. Just there is an invert, I think it's almost a button. Okay, it's not an invert button, but you can just like 1 by the fraction and just inverse the chart. If you have a problem, you'll see that this is pumping hard right now, you know. So buy the dip if it's pumping hard. So sell the bounce, guys. So we're looking at Bitcoin. We're looking at some levels for Bitcoin right here. So you can see this monthly level, how important it has been. The previous time we had such a strong, this is where on a higher time frame, this is where we actually found support for this China move. We dumped below it, built a kind of a spring for this move up. So it makes sense to get a decent reaction here, and currently that is what we're getting on Bitcoin. So can just highlight again the same thing. So for the daily time frame, for now, this is you're basically looking at what levels you can get a reaction, guys. So yeah, these two are very nice levels, you know. First is this weekly level close to 82, between 82.20 and 82.60, and this next weekly resistance level, which will be also close to the golden pocket for this move. So these would be the two levels I'd be looking at, depending on the magnitude of this bounce, to look for more downside. And in terms of finding support, this is a quarterly block. You can see how well it has been respected. We have to see what price does once we do come back into this range. But the objective for this bounce, if total market cap has to get to our target and alts do, then it is probable BTC also gives us this 6500 target, maybe even a 2B of these levels, a stop run of these levels. So yeah, guys, big move has already happened. Don't FOMO short right now. Wait for a bounce. These are two good levels, and let's see what kind of a reaction we get there. Here's large caps against BTC. You can see they got really smashed, guys, and this is about where I was trying to get you guys to be risk off. I know a lot of you who do follow these reviews were able to get out here. Congratulations if you were, because you can see this has been the weakest drop out of everything that we have seen right now. And what have we done? We made a deviation, broke back into the range, and currently we are retesting the bottom of the middle of this range, you know. So there is two possibilities. We can get a slightly higher bounce here, or we can just if you start seeing some daily closes below this, this is the formula, guys, for this. You can just see it on the left. So if you start getting a daily, if the dailies start finding resistance here, then this would be a continuation, guys, and our eventual target would be the lows over here. So basically a full retrace on odds against BTC as well. And you can understand what we are trying to do here, guys. When I was doing this, you know, this is where the idea is scarce, you know. This is where it's valuable, and this is where it's worth money, you know, because everybody is resisting it. When we are down here, everybody is open to this idea, you know. So either the market makes it hard for you to finish it up, or, you know, just you're devoid of a lot of gains, so it's basically just a 15% move left in this, wherein this could have been almost twice that if you're catching it up here. But anyway, alt BTC, there was a stop run over here as well. You can see this on the 4-hour, doing the same thing but looking weaker than everything else that we have seen as of now. So still a trend, and still the major target is a bit lower, so possible to still catch a bit of this move, guys. So what we're looking at here for the traditional markets is the VIX, which is the volatility index. It's overlaid with the Dow chart, and basically the market is yet to open, but I'm just gonna hide the Dow for a second. What you can see is that it's already sky high. Look at historic volatility. Look at the time, the only other time since this index has started where fear has been higher, where volatility has gone through the this is 9/11, guys, like September 2011, right here, and we have basically gone above 9/11 level in terms of level of fear and volatility, and we're heading towards this, depending on how the market opens today. But essentially, look at what happens once we are starting to close above this 44. So let's see where today's daily ends up closing, because we get a daily close above this 45 level, then how this can cascade, basically, because this is where the spike is. It's September, and it was actually 3 months later, October, November, December. In January we bottomed out. So September, October was where we had this spike. This is a monthly chart, right? And it was literally 3 months later that we made the actual market bottom. So, but really depending on how this closes today, guys, but essentially you can already see where the levels of fear and panic are, and the thing is, if anybody's underestimating what this market is doing, they're just hurting themselves. I actually put down a sentiment read in my room yesterday, and essentially 90% of the market was looking for a continuation after this bounce, so what happens to the 90%. Let's go to the Dow Gold. So it's Dow Gold on the weekly, and you can see near the previous review, or this was basically, I think, the end of Jan, where this is essentially what I was projecting, a steep drop over here, because the markets, that we were looking for this correction since a long time. But you can see how this has, absolutely obliterated even this other long term trend line, and now we're just riding this train, guys, and watching how deep this can go, because you can see this trend is broken, and the other setup that we had for a possible bounce and a move out of here will be done for this week if we do get a continuation downwards, which is looking highly likely. So yeah, this is a very unique situation, and it's a great situation to be a part of when you're prepared for it, and when you're not, I think it's an absolute tragedy. I cannot imagine how a lot of people are going to be dealing with this. But congrats if you have been with us since we started these reviews, and let's make the most of this, guys. For now, again, a possible bounce level over here, but there is only one strategy in all markets right now, guys, and it is possible that since that is the only strategy, either we do get a heavier bounce, or we don't get a bounce at all, you know. And the stock exchanges just have to use circuit breakers, because when algorithms and big firms really start getting liquidated, you know, it just looks like this, you know. It's just a constant downtrend. You know, you can see how 2009 worked out. You know, there was still some kind of bounces, but basically everybody underestimated the impact of this virus. You know, it's simple supply chain mechanics, guys, and I do not know how the crowd cannot see that. You know, there is no supply. That lack of supply is going to be felt in all our lives within this month or the next month, because if there is no supply from China and this virus continues to mutate and it continues to create more quarantines, there's just no trade. You know, where is the material, where is the manufacturing, how is the supply? Economics absolutely gets destroyed. So this is basically the face of it. You know, this is what it looks like, destruction. So basically there is no other strategy for now in all markets. Let's quickly look at the Nasdaq. So here's the Nasdaq on the daily time frame. We got a really nice confluence level here, 0.5 level, along with this monthly resistance. That was a great place to be shorting again. And basically it was possible that we could get some kind of consolidation to trap more longs, but I think by now this information has become very common, you know, amongst at least the retail in the financial sector, who themselves have been wanting to go risk off. You know, now it's just about cascading this move. You know, it just does not look pretty. I did have an eventual target of 7150 for this move, but it really depends on what the VIX does, guys, and how the market does move, you know, because you really don't want to be knife catching this unless, you know, you know what you're doing, you know. And even if you do, it's just a very high risk maneuver. The only move here is to watch this. If you're not in it, just watch it. Try and find a place to manage your risk, to trade it down, because you can see how it's looking and where it might be going. So let's see what the coming week brings. If we do get some kind of a bounce back up, maybe yearly open, if we're lucky, monthly resistance, but it looks more likely, guys, that we're just going to see some really ugly price action over here. So we'll quickly look at China's index to see what happened there, to be able to, you know, make some kind of conclusions as to what is probable. But as of now, it's just mass panic, guys, and this was our eventual target, and I'll be looking very closely for once we do come down here, what the shape of the fear and panic is, and if it is possible to actually catch this here, or if we are to make something lower, you know. But for now, I am still short and waiting to add on any bounces, and this is the level where I'm looking for something. I was also looking, there's a nice confluence here, the middle of this channel, to get some kind of a reaction. So going to continue to do that, guys. But for me, yes, there is another move down which should bring us at least to these levels before there is some kind of a stabilization in this market. Here's a quick look at China, and this is the Shanghai Composite, and what you can see is the China drop before everybody else, guys, because the news there was real. Retail was already quite a bit in fear, you know. So this drop was absolutely like terrifying for most of the retail, you know. And then, you know, they put in a huge amount of money back into their markets. You know, this was one of the largest influxes the world has seen in a single day, and they basically stabilized after that, though we've had a massive drop today again, you know. But you can see that even though this is the epicenter of where everything is going on, this is where there's I think more than 20 million people who are in quarantine, but they're still doing what they want to. The markets are like that. The people who make these markets, they have to use it to their advantage and use it the best that they can. But basically China has totally different rules. They banned people from going short, and they control everything, but they are keeping their markets up, possibly to be able to hold all that value to catch the world markets once they are destroyed. But I just wanted to show you a quick look at what is going on there. Even after absolute fear and panic, you do not see these perpetual down moves that you can see in all the markets. So pretty unique and very interesting. It's the shape of price when there is singular control, and it's so different from the rest of the world. So here's the gold chart. I'm going to quickly was thinking of the fact that it's possible we'd build out some kind of a complacency here, and for now there's a decent possibility that this may be done. One very important thing about gold, guys, is that everybody's like, oh, the market is crashing, it's a hedge. But what kind of a crash is it? Is it an inflationary crash like a war, or is it a deflationary crash like an epidemic? Because gold can be a hedge for an inflation, like a war. But epidemics are also deflationary in nature, and I do not think anything is a hedge for that. Cash is what is king. So silver is tanking harder right now, but essentially this is looking like it is a liquidity grab up here. So for now I think cash is king. If you're looking for downside, this is not the market to be looking for it. It is the risk on markets like stocks, which have much better downside. But for now, this is why I wanted to look at gold and try to make you understand that what how this works, because this is so new, for everybody to experience what we are, a possibility of a global pandemic and this kind of fear. This is unique, it's new. So everybody who projects this as a safe haven, you need to understand this, and let the chart prove itself. Let's see what it does. Let's see if we can find support over higher time frame over here and make a move higher. Or if not, and if the markets are dropping and you see gold going sideways, you should know that this move is pretty much done. And once the markets do reverse, this is going to drop hard. So just remember that, and just remember this thing about inflationary and deflationary and how that works as well. His oil on the monthly time frame, absolutely getting destroyed. This is phenomenal what is going on in this market. What I want to show you is that this has happened before. You want to see fractal on oil and price and the shape of price. Just have a look at this. 1 second. Let me build this out correctly. So you have this. Okay. Then you have this. Just change the color. Alright, there you go. Here's this drop. Sorry, it's a bit messy, but I'm just doing this in real time for you. And here's this. And what do we get after? I will paint this red. Got smashed. And where were the lows? Basically made a full retrace. So there is no actual limit to how deep this can go. I would say it's really possible it could still even halve from here. There's oil wars going on right now, guys. If you don't know, this is the shape of war. Saudi Arabia has decided to wage war, and I don't think this price is recovering anytime soon. And this is literally going to attack the American economy. So it gives another narrative of allowing price to carry on moving in the direction where it is. This is 30% move in a day on oil. The amount of money that is moved in this is, it's absolutely phenomenal. Like, the numbers right now are absolutely phenomenal. And for this, I think it is very, very possible that we just keep going, and here it is. Just in fact, this has happened before, and that is the shape of price. This is the shape of reality, and this is the code of the universe that we currently exist in. Fractal nature of market, guys. The shape of fear and greed. What's happened before will happen again, and this is a reflection of it. Hope you enjoy a real-time replication of it, and let's see how this manifests, and let's see in real time, how the market reacts and what it does. And like any other market, guys, this probably has the biggest move still left in it, if it does have to carry on and manifest this. But things are just really, really volatile, guys, so you have to find a place to manage your risk and just be very careful. Like, just be very careful in how you trade these markets, because they are just going to destroy anybody who is greedy. Even to the downside, you're greedy, it will end you. So if you are new at this, I think just sit and watch and see what happens, and let it play out. Cash is king. Be safe, stay in cash, and just let's see how everything manifests and how everything plays out. The next 2 to 3 months, they just look like, they're going to make some people jobless, and they're going to make some people very, very poor, while there are others, who prepared, because that this market, it got smashed quite a bit after the news. There was time, and it's just everybody underplayed what was happening, and what is happening. There is no demand, guys. Oil, China, the biggest consumer, there is such little demand right now. So, and Saudi Arabia just wants to keep pumping in the supply. What's going to happen, and even the global stock markets, the coronavirus news was out in January. We still made a pump, we still held highs, everybody was still euphoric when that was the time to be taking your gains off. We were here in these reviews trying to build out resistance levels where we are going to get decent reactions, and this move will finally be over. And this is just how you need to be. Don't be a sheep, but be careful, guys. This is just a lot of volatility, but the direction, and that just goes for all markets all across the board. So be safe out there, and if you can catch some nice moves, some nice risk adjusted moves, go ahead, go take them, and enjoy the ride, guys. The direction for now, it should be pretty clear.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments, and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!